Hey there, people. Welcome back to the Financial Fortress, place where we provide you with all the resources to empower you so you can make the best decision for yourself, your portfolio in the long run. And today I would like to talk about, when you're starting investing, right? Those first 3 years, in my opinion, are the most important. You have to get into the right habits, know what you're doing, and it can be a little bit scary in the beginning, right? When you are, putting your own money on the line, suddenly having the skin in the game. So it's just crucial to get these couple of steps right, not to get shaken out of the market as well, right? Because that's what happens with lots of the retail investors, and we've seen this over the past couple of months, right? The market's been pretty crazy, pretty shaky, right? Even the mega caps are trading, like penny stocks jumping 10% on earnings. And, if you haven't been around the stock market for a long time, that might feel quite overwhelming, right? So it's really important to get this right. So let's jump into it. So imagine this scenario, right? You are starting in the stock market, starting from zero. And this is how I would personally do it if I had to, start again with that, big fat zero in my brokerage account, and how I would, kind of map out these first 3 years, what would be my strategy, and what I would recommend anyone who wants to start investing on their own, eventually pick individual stocks and really aim for those above market gains, which obviously comes with certain risk. However, that risk can of course be tremendously mitigated by knowing what you're doing and doing your homework, right? Doing the research, understanding the underlying businesses you're investing in. So as long as people are willing to put in that little bit extra level of effort and spend a couple of hours every week staying in touch with the market and keeping in touch with the companies they own, I'm pretty sure you will do just fine. So let's get into it. And year number one. We are in our first year, right? So imagine you know very little about the stock market, maybe you heard something from people around you, and you want to dip your toes in, right? So, in our imaginary scenario, let's say you have 1,000 US dollars to invest every month, which I would assume is something that almost everyone should be able to do. Of course, if you can invest less than that, then that's also perfectly fine, because it's also super important to get that learning curve, right? So it doesn't matter if you are starting with very little money or more. But as long as you want to make a solid dent into your, lengthy process of wealth building, then I would definitely encourage you to find some sources how to so you are able to put at least that 1,000 into the market. Because if you are not able to do so, then you're either having an income problem or a spending problem, right? So get some side hustle or a little bit tame your expenses so you are able to really put that 1K a month into the market. And what to do with this 1K, right? So just to make the start relatively simple, and even if you want to eventually go to picking individual stocks, for the first half a year, just stick with an index fund. In my opinion, that's the best thing to do to get a little bit used to the market, right? To the whims. Because imagine that you just decided to start this year, right, 2022, and you've put your first 1,000, let's say, into Facebook, right, at the beginning of the year. Which you kind of think that, oh yeah, Facebook, there's like this super huge company, must be relatively stable, right? And suddenly earnings come, Facebook plummets 25%, and that might feel quite scary, right? So for like the first half a year, I would stick with index fund, either some of them tracking the US economy like S&P 500, or eventually tracking the world economy, to get used to some of those market whims. And then, just learn a lot, especially during that first half a year, right? Listen to some clever people on YouTube, read some books, spend at least I would say 10 hours a week learning what is the market, how it behaves, what does it mean to own a stock, and get into some of those right habits. And then, as long as you keep learning, that after this first half a year, you should be able to pick your first individual stocks, right? So in our case here, stock number one, stock number two, and put approximately half into each of those. So for these first two stocks, you are looking for some companies which, in my opinion, should be relatively simple businesses. Because obviously those are simpler to value, right? If you are just starting investing, don't try to maybe go for some of the super complicated companies, unless you are already familiar with the sector, right? Let's say you're an IT engineer and you understand some of those software businesses on a super high level, then please go for them. But if you are in some other area, right, and the software is not really your cup of tea, then don't try to put your money there, from the start, because some of those companies take a lot of time to research properly. So maybe start with something simpler, right? Start with some retailers, with simple businesses, because even some of those super simple businesses can produce tremendous results. I've recently stumbled upon like the Crocs company, right, the one making those plastic shoes, and that company has been on a tear like for the last couple of years. Basically, if I remember correctly, Crocs basically almost 10x over the last 5 years. So sometimes you can get super tremendous results even from owning some of those boring companies. So don't be afraid to start with investing with some food company or a retailer. That's perfectly fine, but know your business, know what you're buying, understand the underlying asset, understand the management team and all that comes with it, right? It's definitely a lot of research. And let's get into year number two. Okay, year number two. So you already have your part of your portfolio in a stock 1, 2 and S&P 500, right? And maybe now it's a time to a little bit expand your portfolio. For this year, maybe aim to buy another 2 or maybe 3 companies, because in my opinion, a great investor just needs to make 2 to 3 big moves a year. But since you are really setting yourself up for those small amount of moves and aiming to hold those companies for a long period, those 2 to 3 ideas better be super good, right? So again, understand the business you're buying and really make sure that, if anyone asks, you are able to fully explain them why are you investing in that company, right? If you cannot explain it to your, let's say, parents or even grandparents, then you shouldn't invest in that, right? Even if you are investing in some super complex company, you should be able to boil it down to basically like one paragraph explaining why this company might be exponentially more successful 3, 5, 7 years out. And during your second year, you also start to understand yourself more as an investor, a little bit understand your risk tolerance, maybe what kind of sectors you want to be in, right? Because having those 3 additional stocks in your portfolio gives you opportunity to either a little bit diversify, maybe try to look into different sectors, or look for companies which are a little more complex, right? Let's say those software companies, or again, anything that's little more complex and you need to do some extra layer of research to fully understand it. And refine your strategy, right? By this time you should be able to look ahead and prepare where you are kind of going 5-10 years out, and what's also kind of your end goal as an investor, right? To what number are you trying to get, maybe, or what kind of your end game are you planning for, like a retirement? Are you investing to eventually be able to afford, let's say, house? Is it a challenge for you? And during this second year, some of those thoughts should crystallize in your mind, and you should be able to prepare your plan for, again, kind of the decade, right? Because as a long-term investor, you really have to have that vision, not just for the companies you own, but also for your own personal journey of investing. So that was for the second year, and let's get ahead into the year number 3. So by this point, you already have your portion of S&P 500 and approximately 4 or 5 different stocks. And during this third year, again, you should probably add another 2 or 3 stocks, right? Again, as we talked during the year 2, you just need 2 or 3 great ideas per year. Or depending on the market conditions, you might also double down on some of those stocks from previous year, because sometimes even if maybe the previous year your stock maybe 3 or 4 are doing fine considering the price, the company is doing well as well, but maybe stock number 5 is having some tailwinds that are affecting the stock price in the short term, right? But the underlying business is still doing well. You still, basically your vision is in a sense intact. So you might as well funnel some of the extra funds to that stock number 5, right? If you still believe the business. And at this point, you should be able to basically make those qualified decisions for your portfolio. If it's better to invest into some of the stocks you already know, open new positions. And, by this point, if you were investing those approximately 1K per month, you also invested at the end of the year 3 about 36,000, right? Meaning with certain stock appreciation, if we are in the bull market, you are maybe looking at a portfolio that's somewhere, hopefully around, let's say 50K. And from that point, it's not that far to like the 6 figures, right? So really prepare yourself what's the game plan there, because it's in a sense relatively likely that you should be able to hit those 6 figures maybe somewhere on the year 4 or 5. And of course, then it starts to be slightly a different game, right? And once you have a 6 figures, it's also your new contribution into your account does not make that much of a difference. So then it over this year, like 3, 4, it really starts to show if you've made the good decisions in the first couple of years, right? So it's also important to a little bit reevaluate your portfolio, look at those stocks if they are performing as you intended, and maybe readjust some of your principles. And in a sense, I'm always saying consistency wins, consistency kills. As long as you are basically doing fine over the first, second, and third year, it's in a sense starts to be a little bit self-reinforcing, like a flywheel, right? Where, as long as you've established those good habits, they should basically follow you and help you to, again, exponentially grow your net worth over time. And now we are just talking about, getting slightly better with each year as an investor. Keep learning, because obviously those gains, that learning should translate in a, outsized gains over time. So basically this would be my first 3 years of investing. If, suddenly you wiped out my investment account at this point and I had to start from the beginning. And I hope this was helpful for you. If you would like to go take it a little bit level further, consider joining us in the Financial Fortress on the link below. We are here to empower you, make those important decisions for you and your portfolio, provide you with all the resources, and we are doing research on stock on a daily basis with our team of coaches, as well as Jeremy from Financial Education. And yeah, looking forward to see you on the inside. Thanks and see you soon.